what we're going to be talking about are opportunities that are available right now, mid-year 2020. This isn't something that was from 3 months ago before everything happened, and this is not something that's for 6 months down the road or 3 months down the road. These are opportunities we're talking about right now, today, in May 2020 and mid-year. This type of thing should be available for several months after this call and after this webinar here tonight. So first thing let's talk about is the current market. So everyone knows it's nothing out of the ordinary. Everyone's aware that we're in the middle, or I would hope that we're at the end of the pandemic, right? So we've been going through this, and finally things are starting to reopen across the country. But what's happened is, the interest rates were hovering at a very low level. Pretty much since around November of 2019, they really started coming down dramatically. And around January, February of this year, they kind of stalled. They were at a very low level, but it kind of stalled out at very good levels. At the same time, when COVID-19 came about, when this whole issue of us quarantining and the economy basically started faltering, the stock market, had its biggest drop since the Great Depression and all these other statistics I'm sure you guys have heard. Right now we're in a position in this country where our financial markets have been very strong, and the Federal Reserve stepped in to avoid having such a big recession, to avoid having, a complete meltdown of the economy. The Federal Reserve stepped in and they started buying billions and billions of dollars of mortgage-backed securities. And this all started happening in like late February to early March of this year. And they've continued to buy huge amounts of these mortgage-backed securities. So the way that the mortgage interest rate market works is that, as people are buying, it's just simple supply and demand. The more buyers there are, the higher the demand is. So the Federal Reserve is the one, the organization that really controls interest rates in this economy, has just literally been printing money and using all this money to support the economy with the stimulus and whatnot. But a huge part of it is that they're buying huge amounts, trillions of dollars of mortgage-backed securities. Every single day, they are buying $3 to $6 billion every single day of the week of mortgages. So they're by far the biggest buyer right now. And what that's done is it's supported the mortgage market. It's made it so that the mortgage rates are very low. And why would they want to do that? Because much better than a stimulus check, if somebody can get a mortgage and save $200 a month, that's $200 a month forever that it's going to pay them. It's not just a one-time stimulus. This is going to pay families for many, many years to come, and it's much more, it has much more traction in the economy. Instead of just giving a one-time stimulus, by supporting low mortgage rates, they can prop up the economy, the real estate market, and they can help people really take advantage of money-saving opportunities. So we talked about refinancing, but home buying is really plays by the same tune, which is the lower the interest rates are, the more home that somebody can afford. So as an example, if a year ago someone could afford a house for $300,000 when the rates were, say, 4.5%, now if the rate is 3.5% with the same monthly payment, they might be able to get a house for $30,000 or $40,000 more dollars. Okay, so that's going to keep that price of real estate continuing to move up, continuing to increase.
Sorry to interrupt, guys. Are you guys okay if he records this? Because this is really good information, and if you can send it and we can just review it later too. Is that okay with you guys? Yeah?
Yes.
Okay. Can we record it?
Yep.
Perfect. Thank you.
Okay, no problem. So basically by having those low interest rates, it's continuing to help propel the real estate market. It's continuing to support the appreciation of real estate, okay? And all indications are that the Federal Reserve is going to continue to do whatever it takes to keep this economy going. They're going to do whatever it takes to keep mortgage interest rates low. So it's my understanding, and the economists that I follow agree, that these record low interest rates should continue through the end of 2020. Beyond that, nobody really knows, but they have really said that they're going to continue to support this level of interest rates at least for the next 6 to 7 months. Okay. So going back to home buying again, when somebody has a high level of equity, if they sell their house, it gives them more money available to put as a down payment on a new property, or what we call move up buying. Okay, so it's going to further stimulate them being able to move up to another property. The other thing is that a lot of homeowners don't realize that they can use the built up equity in their home to leverage, to pay off debt, to buy other properties, to change their monthly payment, either shorten the length of their mortgage or extend the length of their mortgage depending on their budget. So there's all these things that you can do with built up equity in the home. So the more the real estate stays stable and increases, the more equity is going to be available. And right now, there is an all-time record of equity in homes, meaning that people have more equity now in their properties nationwide than they have ever had in the history of this country, which spells opportunity for people in the real estate market and also people that own a home right now, as we'll talk about, okay? So if you're watching this and you are a homeowner, you're probably thinking, okay, but who can really guide me through this, or how do I get advice on all this? And that's really what we're going to cover here for the next few minutes. But it's important, and a lot of people miss the fact that when you're buying, selling, or financing real estate, everyone looks at it as just a transaction. They look at it as just, I'll deal with who I have to deal with and I'll move on with my life. And it's just a 30 or 60-day timeline, and then that's it. But I've taken really a different approach. Like Sophia said, I've been doing this over 17 years now. I have helped over 1,000 people buy, sell, and finance real estate in my career. So I'm very proficient with it. I'm very fluent in all the different types of transactions. And I've really taken the position of being a trusted advisor to my clients, not only one time, but on an ongoing basis. And if you're a real estate professional watching this, I would encourage you to take that same approach, because yes, you may not make money on every phone call, and you may not be doing a deal on every person you speak with. But if you can be positioned as an expert, as a real advisor, to not only help people buy and sell real estate, but also help them manage their real estate, manage the opportunities that come with owning real estate in the U.S. economy today, then you're going to be top of mind when it comes time to buy a property. When it comes time for them to list their property, they're going to be thinking of you first, because you're not only their realtor, their real estate pro, you're also their trusted advisor. Okay. And the same thing goes for the mortgage end. You don't want to just do business with a bank that you fill out an application, you get a mortgage, and that's it. Yes, that works, but there's so much more to it than that. The average homeowner finances real estate 8 times during their life. Okay. That's 8 different mortgages that the average person will get during their lifetime. So it's not only about buying and selling a property, it's about managing the equity in that property, taking advantage of opportunities to build wealth like we're talking about. So it doesn't matter if it's me or somebody else that you've worked with before. I guess the point is you want to make sure you've got a trusted advisor that's advising you, that you can call, that you can email, that you can have this ongoing communication with to help manage your real estate, your mortgage, and your finances on an ongoing basis. So something that I've done is, just in the last year, I've started using a program called HomeBot. And I'll show you guys HomeBot in a second, because it's a free program for homeowners. You just have to get sponsored in by somebody like myself or a real estate agent. And I have myself 1,000 licenses for HomeBot to give away. And I've only given out like 300 of them. So I have a lot more licenses. But what HomeBot does is it takes this trusted advisor role to another level, and real estate agents can use HomeBot as well as lenders. So what HomeBot does is it will automatically monitor your situation as a homeowner every single month. Okay, and it will alert you of opportunities that you might have to cash out equity, to build wealth through real estate, to lower your mortgage interest rate, lower your payments. And I'll show you an example here in a minute. But HomeBot's been a huge win for me and my clients. And, you don't have to get it, but it's free. And if you're somebody that this is of interest with, if the things that I'm talking about are going to resonate with you, then I would recommend you sign up for HomeBot. And I'll give you a link here in a minute to where you can do that. And as a real estate professional, it will allow you to load your database of real estate property owners and prospects